Well, howdy there, folks. I did indeed sell some stocks here today, and we're going to cover exactly what I sold, why I sold some of these stocks, and where I put the money ultimately, which is, I think, just as interesting as selling. And obviously, it's not a subject we talk about very often on the channel, and they're always hard decisions to make. I can tell you personally, selling decisions are harder decisions to make as a long-term investor than buying decisions, because there's always going to be a lot of stocks that are attractive as buying opportunities. But when you go to hit that sell button, it's always a tough decision. Okay, so hope you guys enjoy this as always. I hope you get some value out of today's video. I appreciate everybody joining me. Thanks for being subscribed, folks. A few things I want to cover that I think is very important. I bring to everybody's attention before we get into obviously the stocks I sold here today, where I put that money. Okay. First is something we don't talk about a ton on the channel, but this is moving the market substantially. This is the dollar index, good old Dixie, okay? Now, what has been going on here essentially is the dollar has been going down, to put it quite simply. The dollar peaked in around the second week of October of 2022. And since then, it's basically been going down, 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 right? It's had a few bounce backs where it bounces back for a few weeks, but ultimately it just goes lower and lower and lower. Now, guess where the market bottomed? The market bottomed the second week of October. Isn't that fascinating? The exact moment that the dollar peaked, the stock market bottomed. Pretty much all the indexes actually bottomed all right around the same time. Now, this goes to show you, obviously, the dollar is very, very important to the stock market. And a dollar that is going down can be seen as like risk assets are going to go up, right? And vice versa. A dollar that's going up over time is going to put, I guess you can say, risk assets in a tougher place. Now, why is this? It's very important to understand why this is. There's a few different reasons, but one of the reasons is, especially for a lot of U.S. companies that do business international, is a dollar, let's call it being in a very elevated place, can actually hurt earnings significantly. And this is why over the past, I can say, year or so, you've heard a lot of companies talk about their earnings if FX was on a neutral basis, okay? And this is starting to be picked up by even obviously mainstream media. Reuters today put this out. Tumbling U.S. dollar is a boon to risk assets across the globe. Cooling U.S. inflation is accelerating a decline in the dollar, and risk assets around the world stand to benefit. The dollar is down at nearly 13% against a basket of currencies from last year's two-decade high. It's incredible, right? And stands at the lowest level in 15 months. Its decline quickened after the U.S. reported softer than expected inflation. So as inflation becomes less and less of a problem, we should continue to see the dollar go down. Now, keep in mind, if for any reason inflation was to start booming again or something, there's a potential that obviously the dollar could go up in that situation, and guess what would happen? Stocks will go down in that situation. The correlation is exact. I mean, it's almost scary how perfect it is. I mean, if you look at the dollar in 2022, that baby just went to the moon. In the exact moment the dollar started to go down, the stock market finally had hit a bottom and started to go up. And as far as the Qs, SP 500, the Dow is right around that time, Russell's right around the time. It's fascinating. But the riskier stocks are seen as really the ones that kind of bottomed all around that, let's call it mid-October to beginning of November timeframe. Absolutely incredible, right? Now, there's a few important slides I want to show you guys here that I think everybody needs to understand these. Basically every single week inside the private group, we put out this investor report. It's pretty comprehensive. We put a ton of information in here that's very helpful to members of the private group, right? And let me just show you a few things, okay? The first thing is the AII investor sentiment, right? And if we go ahead and take a peek at this, last week we hit a bullish high of 46.4% for investors bullish on the market for the next 6 months. This week we're at about 41%. So the markets went a little less bullish, which is kind of surprising considering inflation came in better than folks expected. I guess we're just switching cameras. What I believe happened here is I believe the market's gone up so much that I think some folks just kind of looked at it as like, I don't want to be as bullish kind of moving forward. So a lot of those folks moved over to the neutral side. A few people moved over to the bearish side. And that's kind of where we're sitting as far as AI investor sentiment. Now, the CNN Fear Greed Index is in a bad place right now. In a bad place meaning like it's kind of scary if you're along the market because we're in extreme greed right now, right? Market momentum is in extreme greed. Stock price strength is in extreme greed. Stock price breadth is in extreme greed. Put call options are in extreme greed, right? Market volatility, safe haven demand are both in neutral right now. So now do keep in mind this can stay in greed or extreme greed for a long period of time. And actually, for much of this year, these readings have been in greed and extreme greed. So if you think like, oh, just because this is in extreme greed or even in greed phase, you think like, oh, this means the market's going down. Doesn't mean that at all. It's been like this almost this entire dang year, okay? It's been like this for a while now at this point in time. Something so important, one of the most underrated, most important things you can possibly look at in the entire financial system just came through, okay? And there's a University of Michigan Consumer Sentiment, which they've been doing this survey for literally generations, okay? Now, Consumer Sentiment Survey came in at 72.6% in July. That's up from June's reading of 64.4%. That's up 12.7% on a month-over-month basis and up 41% year over year, right? So this basically means the consumer is in a whole lot better place than they were at this time last year, or at least their feelings are, right? We're talking about sentiment here. The consumer sentiment, Michigan consumer sentiment, hit the lowest level we've ever seen it hit in history. It hit that literally in 2022, around summertime 2022. And since then, we have started to slowly come back to life. Now, this is a big move up here. So this is something I look at that is very important because let's be honest, we run on a consumer economy. If the consumer is not in a good place, guess what? If they're not feeling very good, they're not going to go out there and spend. And guess what happened? Companies like Amazon, Shopify, everybody saw a huge dry up in orders, right? And we saw that play out in Q3, Q4, into Q1. Consumers starting to feel a little better. So guess whose numbers we should start seeing improved quite a bit? Companies like Shopify, companies like Amazon, companies like PayPal, companies like Tesla, and many others. You should actually see their earnings, their revenue stories, and their guidance getting more comfortable over the next several quarters since consumer sentiments come back so much. It's a very important thing to watch. And that consumer sentiment led you to where these company earnings were at, right? And now it's going to lead you kind of out of that situation. So this is a very important factor. It's one of the most overlooked in the market, and it shouldn't be. I think it's one of the most important factors to understand kind of where company earnings are going, and especially because we're such a consumer-driven economy, right? And ultimately where the economy is going, okay? Very important. Now, something that scares me still at this point in time is mortgage rates, okay? You know, we're looking at a 30-year fixed rate of about 7% right now, right? And a year ago, it seemed like it was super high, and I was when it was at 5.5, right? So, you know, real estate continues to be in a very tough place, and as long as real estate's in a tougher place, it's going to definitely hold back the economy somewhat. The economy is always healthiest when the real estate market's in a healthy place. I would not describe the real estate market as being in a healthy place. Prices are very elevated still, and we got these insane mortgage rates. You know, homes just aren't even affordable right now. So ultimately, how I feel is we're not out of the woods necessarily when it comes to the economy. It's not like I feel like an all clear, like everything's going to be grand from here on out. I think, you know, things are looking pretty good for the next few quarters, but I still have a lot of concerns about 2024 and in the future. So myself, I feel somewhat confident, but I don't feel all the way confident in that, like, oh man, the economy is going to boom like crazy in 24 and 25. Because I look at some of these factors and I'm like, that's bad news, man. That is bad news. When you got a system that is used to having mortgage rates of 3%, and they've had that for, you know, 3-4% mortgage rates for, you know, 15 plus years, and then you go to 7%, it's awful. It's absolutely awful, and eventually that catches up to you, right? No. Oman put out this 6:02 this morning inside the private group's Discord chat under breaking news, right? JP Morgan announced they just made $14.5 billion in profit on $41 billion of revenue. That's a 35% net profit. That is insane for a competitive industry like banking. By comparison, Google and Apple are at 21%, 25%. The JP Morgan numbers were pretty shocking. They were unbelievable. As a shareholder of JP Morgan, I can tell you I was very happy with those numbers. I think I need to look at this camera now because the other camera shut off. I was very happy, extremely happy. I couldn't have been more happy with JP Morgan earnings. Like if all my other companies report as great numbers as JP Morgan, I'll be a happy camper, okay? Now, the important thing to understand about this for everybody out there, whether you own JP Morgan stock or you don't, is at the end of the day, there's no more important financial institution to pay attention to than JP Morgan. They are the big dog that is the end all be all. And if they're in a great place with their numbers, you have some breathing room there for a bit, okay? When we see a company like JP Morgan, if their numbers ever get worse, whether that's at the end of this year or at some point in 2024, you need to start to worry, okay? You need to start to worry about the economy. But for right now, their numbers are extraordinarily great. I went through with the private group today inside the Friday video we do. I went through the numbers in depth. Absolutely phenomenal. I mean, absolutely phenomenal numbers across the board. So I was extremely happy with that. Oman also posted this. He said, Jamie Dimon said this: the economy is resilient. Consumer balance sheets are healthy and they're spending, albeit a bit more slowly. Labor markets have softened but remain strong. There are risks in view. Many I've written about this year. Consumers are using up money buffers. Core inflation is stubbornly high. QT, quantitative easing of this scale, has never occurred, and fiscal deficits are large, right? And so that's kind of, I mean, Jamie Dimon's sentiment is kind of similar to mine, where it's, you know, we got several different positive things that are going for us, but it's not everything just, you know, perfect. We still got a lot of wariness. And I think that's what's presenting a lot of kind of really good opportunities in this market, because things are still unsure. It's not like everything's going our way in terms of the economy and what's going on there. There's still several things that are what I call scary things that are out there. And what does this mean? What is going to happen here? And I think ultimately that produces you a stock market that is much more interesting to be a long-term investor in than really any other market, because you still get a lot of opportunities. I'm still looking at a lot of, you know, dividend stocks, value stocks that are really good opportunities, some growth stocks as well. And so we'll see how obviously all this shakes out, but I would say my sentiment is very similar to kind of Jamie Dimon in this respect, right? Now, while I was working, I was sitting in the chair, sitting in this chair right here, just doing a little work on my computer and whatnot, and all of a sudden, Intuit CEO came on, and I thought, wow, Intuit's a massive company, and obviously they own the TurboTax product, they own QuickBooks and many other businesses, so they really have a great insight into how the consumer is doing, how small business is doing, and mid-sized businesses are doing. And I can tell you what the gentleman said. He basically said that things are going pretty good. You know, he didn't have this type of sentiment that was like overwhelmingly bullish, like everything's, you know, the best ever and this is the strongest economy ever and everything's perfect. But he definitely had a sentiment that, you know, things are improving or pretty decent for small businesses overall. And I think that's important. In my opinion, it is always like, as small businesses go, the United States economy goes. If small businesses are hit substantially like they were in 2022, it's going to hold back the entire stock market. It's going to hold back the entire economy, because at the end of the day, those small businesses, man, they're what propel everything. They're the ones that help the mid-sized businesses and the large companies that are public companies to actually reach numbers, right? So I thought that was optimistic. Like I said, he was not overwhelmingly bullish. It was just like the sentiment was more on the bullish side overall for small business and what's going on there, and kind of small businesses being in a better place. So overall, I was happy with that. Okay. All right. Now let's go ahead and get into stocks I sold here today, why I did it, where I'm putting the money, and things like that. Okay. So first up here, I went ahead and sold about $35,000 worth of Corsair shares in the public count here today. The public count's a portfolio I have that has about a little over $1.8 million in it, and everybody that's in the private group gets to see every single move I've ever made in that portfolio and ever make in that portfolio, right? And get to see exactly how I run a big money portfolio, obviously through Fidelity Investments, approaching $2 million, right? And so I went ahead and did that. With Corsair, what it came down to is, you know, if analysts, I'm slightly more bullish than analysts are in regards to Corsair for 2024 and 2025 numbers. But basically, analysts have them doing about 77 cents of EPS in 2024, which would put the company at about a 23, 24 forward PE, which I wouldn't call expensive. I wouldn't call it cheap either for Corsair. I'd call Corsair pretty fairly valued. I think Corsair's true forward PE is probably about a 22 right now, in my personal opinion. For a business like Corsair, it's not cheap, but it's not overvalued. So it's a fairly valued stock, right? 7%, obviously revenue growth expected this year, 12% expected next year. So Corsair's a solid stock. I like it, and I remain a shareholder. I'm, you know, happy to hold about 3,000 shares of Corsair stock, right, in the public count. But ultimately, there is a better place for the money. In you know, going into this, I had more money in Corsair than I did this other stock, and at the end of the day, this other stock, in my opinion, is going to outperform the stocks quite significantly. Now, you never know these things for sure. Maybe I'm wrong about that. Maybe Corsair outperforms this other stock over the next few years. I don't think it's going to happen. That's why I need more money in this other stock versus a stock like Corsair, okay? And that is PayPal. So I went ahead and put that money in PayPal here today, right? And as far as PayPal in the public account, that brings me up to about an $86,000 position, which, by the way, I'm going to continue to buy PayPal shares, so don't be surprised if this goes well over $100,000 before it's all said and done, right? So, Corsair, about a $53,000 position, PayPal, about an $86,000 position on its way to becoming a $100,000 plus position. That's where I want to be, okay? That's where I want to be in regards to this. PayPal, I'm just looking at a company that I'm getting for a forward P of probably about 11, maybe 10. And it has double-digit revenue growth ahead for years and years to go in the future. So from that perspective, I mean, I need to have more money in PayPal than Corsair. Once again, I could be wrong. Maybe, PayPal really disappoints over the next couple of years. Maybe Corsair smash it, and maybe Corsair outperforms. I just think I feel more comfortable in having much more money invested in PayPal than I do Corsair. And so that's why I went ahead and made that move here today. Like I said, whenever you go to sell a stock, you've got to feel like there's somewhere better for the money to go. You've got to have that next place figured out. It's not like I sold those, roughly 2,000 shares of Corsair today just to sell them. It's because I looked at them and I said, I think I got a better opportunity in this market, and I want to put more money in this other opportunity. Okay. Now, next stock up here that I went ahead and sold out of. Corsair, good company, good management team, not a lot of problems probably going for them for the next few years. They're in pretty smooth sailing. This next company, it's a mess, and that is Disney. Disney, less than $1,000 position I had in the dividend portfolio, which is another portfolio you get full access to when you're a member of the private group, right? And, this was one of those that it was like, I started this little teeny position here. I own I think 9 shares. And I thought maybe I would just buy the stock for a while, as in 6 months, 12 months, I'll just continue to buy shares. But the more time ticked on and the more I kind of thought about Disney, the more I was like, this is not a stock I want to be part of. This is a mess, an absolute mess of a company. I mean, the amount of issues on Disney's plate right now is, I don't even know where to start. I mean, their parks are reporting disappointing traffic when, travel's booming right now. They should not have disappointing traffic in their parks. And that's the best part of their business. From there, it just gets much worse, right? The streaming, they're still losing a fortune when it comes to that, right? ESPN's a mess. They just fired a ton of people at ESPN, big-name people, because ESPN's profitability just isn't quite there, right? Linear TV in general has just been kind of a drag for them. Obviously, there's a massive shift in the overall cable landscape, and some people just not having cable, or then they're switching to streamers such as YouTube TV, such as Fubo. That's a whole disruption that's going on. Bob Iger sounds like he wants to sell off the ABC business. So what does that mean going forward? The company has a lot of debt. They have the DeSantis thing. I mean, my gosh, there's so much with Disney that I'm just like, I don't want to go through all that crap. It's too freaking much. There's way too many opportunities out here in this market to be screwing around with Disney. And so could Disney be a moneymaker over the next few years? Sure. I just don't want to be part of that mess. There's way more opportunities in this market that I could probably make a lot more money, not have to take nearly as big a risk, and not have to go through the headache that is going to be years of restructuring and trying to get that business right. Things are not going to be fixed in a quarter. I told you guys going in, Bob Iger is going to be there for a lot longer than he was thinking. He was thinking 2024 and he'd be out. Now all of a sudden they're talking about Bob Iger is going to be here until at least 2026. The reason that's going on is because he's realized this is a freaking mess, and this is going to take years to clean this up. And the board of directors says, okay, we'll give you the next few years, because he can't even hand that company off to somebody right now. Literally, it's too messy. And so that's what's going on with Disney. Now, in terms of where I put the Disney money, I put the Disney money into another stock that's a little messy right now, but the difference is this stock's problems can be fixed in a matter of a couple quarters, not like a Disney where it's going to take years. And that stock is Target. Target is a position I'm building. I want to continue to build this one in the dividend-only portfolio. So once again, the dividend portfolio has about $170,000 in it or so. It's only dividend stocks can be in there, and Target's a stock that I want to build into at least a 5-figure position in that portfolio, maybe $20,000, $25,000 over time in terms of what I really want with Target. We're looking at a company here that trades based upon, so their fiscal year ends in January, so it's kind of a weird time to end your fiscal year instead of December. But basically, based upon 2024 numbers, we're trading at about a 13 forward P on the stock. If you want to say, oh, maybe they'll be a little less profitable than analysts expect, okay, so maybe they're trading at a 15 forward P. If you want to say they're going to be a little more profitable than what analysts are expecting, then maybe they're trading at 11 or a 12 forward P. I feel very comfortable. I'm going to sleep very well at night holding a stock like Target, and I want to continue to build out that position much bigger over this next, we can call it, I don't know, maybe 3 to 6 months, maybe 9 months. We'll see kind of what goes on there. And Target's one of those easy buy the dip opportunities for me where even if there was a recession, I'd feel comfortable buying it. Like, really regardless, I feel comfortable kind of buying that stock and kind of loading up there, okay? Now, obviously, you're going to have, periods of volatility in this market. You have time periods when things look bad and things look good. At the end of the day, like, the best advice I can give to folks out there is make decisions out there that you're going to be proud of over the next 2, 3, 4, 5 years. If you're buying a stock, make sure it's a stock that you're going to be proud of, that you're a shareholder of, long into the future. And don't make any decisions that are just based upon short-term things. When I made my decisions today, such as around, Corsair, such as around Disney, right? And, those are long-term decisions because I believe there's better places for the next several years for my money, right? I believe Target's an easier risk-reward profile than Disney over the next 3 years. I believe PayPal's an easier risk-reward profile than Corsair for the next 3 to 5 years, right? And so I want to allocate more capital there than something like Corsair. So whenever you're thinking about these things, make sure you're thinking about the next 2, 3, 4, 5 years and not the next 2 to 5 weeks. Because the next 2 to 5 weeks, anything can happen. Some big news can happen with this stock or that stock and it moves up huge or down huge. Like, don't let that get in the way of your long-term focus and where you're trying to build your portfolio and building a portfolio you're going to be proud of for years to go in the future. When I look at the public account, very proud of what we've been able to build there. As a portfolio I started a little over 5 years ago, probably 5, 6 years ago, right? And, now it's a $1.8 million plus portfolio. I think eventually it's going to become a $3 million portfolio and a $5 million portfolio. And someday in the future, it will be a $10 million portfolio. But all the decisions in there are long-term. Not all of them are going to be correct. Sometimes I'm going to screw up. Sometimes I'm going to make a mistake. Sometimes I'm going to buy a stock that didn't work out, and it's going to go really bad. And I'm okay with that because in this game, you're going to make some mistakes. But always focusing on the long term, and the rest of this game is going to be what it's going to be. Okay, so appreciate everybody joining me as always. Thanks so much, folks. Thanks for being subscribed. Hope you got some good value out of today's video. I appreciate you joining me. Also, if you're looking to apply to try to join my private group, I invite you to fill out an application. That will be the pinned comment down there. We can, talk to you, see if you're a good fit for the private group. Maybe you are, maybe you're not a good fit. That's perfectly fine. Not everybody's, kind of cut out to, be in a group like that of high performers and whatnot. So appreciate you joining me. Much love as always, and have a great day.